Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate jargon to find what really matters. Perhaps you'll find out what really happened with Luxfer Holdings PLC and decide if this company is a diamond in the rough or just another quarterly fluff. In this video, we're diving deep into Luxfer Holdings PLC's latest financial report, the 10Q, which gives us a snapshot of their performance. We'll be looking at their sales, their profits, and the underlying story behind the numbers. Make sure you stick around to the end for my take on whether this company is heading for success or facing rough seas. Also, if you love getting the real story behind corporate filings, hit that subscribe button and join our Discord community linked in the description below for more insider insights. Alright, let's get right into it. This report covers the quarter ending the 28th of September 2025. Think of it as a progress report on how the company is doing right now. First up, let's look at sales. In the third quarter of 2025, Luxfer brought in $92.9 million. That is a bit less than the $99.4 million they made in the same quarter last year. Sales are down about 6.5%. For the year so far, they've sold $293.9 million worth of goods and services. That is up slightly from $288.5 million last year, about a 1.9% increase. So while the third quarter saw a dip, the year as a whole shows a small gain in sales. Now let's talk about gross profit. That is what is left after they pay for the materials and labor to make their products. In the third quarter of 2025, gross profit was $21.7 million, down from $22.4 million last year. As a percentage of sales, it went up a little to 23.4% from 22.5%. This means they're getting a bit more out of each dollar of sales, which is good. For the year, to date figures, gross profit is up to $67.1 million from $62.8 million last year. That is a solid 6.8% increase. And as a percentage of sales, it has improved to 22.8% from 21.8%. So despite the dip in overall sales, the company seems to be getting better at making a profit on what they sell. Now, when we look at selling general and administrative expenses, or CNA, that is the cost of running the business, everything from sales staff to office expenses. In the third quarter, these costs were $10.8 million, down slightly from $11.4 million last year. As a percentage of sales, it stayed pretty much the same, around 11.6%. For the year, to Todd, date numbers SG&A costs went up a bit to $36.5 million from $34.9 million last year. As a percentage of sales, this is up slightly too. This is where things get interesting. In the third quarter of 2025, Luxfer took a restructuring charge of $3.5 million. That is way up from just $0.5 million last year. For the first 9 months of the year, these charges hit $5.6 million compared to only $2.3 million last year. They explain these charges are for reducing fixed costs, improving how the business runs, and centralizing operations. This means they are likely closing facilities, laying off people, or making other big operational changes to save money in the long run. A big part of this is accelerated depreciation, meaning they are writing off the value of equipment faster because it is no longer going to be used as originally planned. That and asset impairments for inventory that is no longer useful. This indicates a significant operational shift is underway. And another big item here are disposal related costs. In the third quarter of 2025, these were $1.1 million, up from just $0.1 million last year. For the year to date numbers, this jumped to $1.2 million compared to a whopping $9.5 million last year. This is related to selling off parts of the business. In 2024, they had a big loss of $7.5 million on selling assets for their graphic arts division. In 2025, they had a $1.1 million loss on selling their graphic arts business. This shows they continue to divest or restructure parts of their operations. Here is a positive note from last year. The company had a $6.1 million gain on selling assets that were held for sale. This year, there is no such gain reported in the third quarter. There was no other income reported in the third quarter of 2025, which is a big change from last year when they had $1.9 million. For the year, to date, this difference is even bigger with $7.2 million in other income last year and nothing this year. The report explains this income was related to recovering legal costs from insurance from a case called US Ecology. So that $7.2 million was a one-time boost last year that is now gone. So with all these items combined, let's look at operating income. In the third quarter of 2025, it was $5.4 million, which is a big drop from $17.4 million last year. For the year-to-date, operating income is down to $20.7 million from $26.1 million last year. This drop is largely due to the restructuring and disposal costs we just talked about, and the absence of that legal cost recovery. And at the bottom line, net income for the third quarter was $2.7 million, down from $12.7 million last year. For the year, to date net income is $10.8 million, down from $14.9 million last year. The earnings Per share numbers also reflect this decline, showing a drop from $0.47 in the third quarter of last year to $0.10 this year. Let's peek at the balance sheet. As of the 28th of September 2025, total assets were $377.4 million, slightly down from $382.4 million at the end of 2024. Inventories are up to $95.1 million from $83.6 million at the end of last year. This could mean they are stocking up in anticipation of higher sales, or perhaps facing challenges in selling their products quickly. Total current liabilities are $101 million, up from $93.7 million. This is mainly due to an increase in current maturities of long-term debt. Overall total liabilities are down to $145.8 million from $162.9 million. This is good, showing they have managed to reduce their overall debt. Shareholders' equity is up to $231.6 million from $219.5 million. This indicates the company's net worth has increased, which is generally a positive sign. Looking at cash flow, the company generated $18.4 million from operating activities for the year so far. That is down from $25.6 million last year. The decrease is mainly due to lower net income and unfavorable changes in working capital like higher inventories. Investing activities used up $0.5 million this year compared to nearly $8 million last year. This is because they spent less on capital expenditures, that is things like new equipment or buildings. Financing activities used up $16.2 million this year, similar to last year. This primarily reflects dividend payments. They paid out $10.5 million in dividends this year, and last, they also continued share buybacks. Remember those restructuring charges we talked about? They are a big reason for the drop in operating income. Luxfer is clearly undertaking significant operational changes. They're trying to streamline their business by centralizing operations and divesting non-core assets like the graphic arts business. This is a classic strategy to increase efficiency and focus on more profitable areas. Now let's look at something called adjusted EBITDA segment profit. In the gas cylinders segment, adjusted EBITDA as a percentage of sales dropped by 2.2 percentage points in the third quarter. For the year to date, it is down 1.4 percentage points. This is mainly due to a less favorable sales mix, meaning they sold more lower margin products. In the electron segment, the story is a bit different. While adjusted EBITDA as a percentage of sales also decreased, the report attributes this to favorable product mix and cost discipline. This segment saw higher sales of things like magnesium aerospace alloys and specialty materials for oil and gas. The graphic arts segment is pretty much gone. As mentioned, they divested this business in July 2025, so its sales are now zero and its financial contribution is effectively finished. So what is my take on Luxfer Holdings PLC based on this report? On the positive side, the company is showing some resilience in its sales for the year to date, and it is improving its gross profit margins. The equity is growing and they've managed to reduce their overall debt. They are also actively reshaping their business by shedding less strategic assets like graphic arts and trying to optimize their core operations through restructuring. However, there are some clear warning signs. The significant increase in restructuring charges indicates a period of disruption and potential pain. The drop in operating income and net income is substantial, and even though some of it is due to one-off items like asset disposals and the absence of a large legal cost recovery from last year, the underlying trend shows a weakening in profitability. The decline in adjusted EBITDA in some segments, especially gas cylinders, points to challenges in generating profit from their core sales, suggesting either pricing pressure or a shift towards less profitable products. The company's strategy seems to be about becoming leaner and more focused. This can be a good thing, but the short-term impact is a hit to profits and a lot of operational shifts. They are essentially trying to build a stronger foundation for future growth, but the current quarter shows that this process is costly and impacting their immediate financial performance. The key going forward will be whether these restructuring efforts lead to the cost savings and improved profitability they are aiming for. Investors will be watching to see if the sales mix improves and if they can get back to consistent profit growth. Alright, that is our deep dive into Luxfer Holdings PLC's latest financial report. What are your thoughts on these numbers and what do you think the future holds for Luxfer? Let me know in the comments below. If you found this breakdown helpful, give it a thumbs up and consider subscribing for more corporate insights. And for those who want to connect with other finance enthusiasts, join our Discord community linked in the description. Thanks for watching and I'll see you in the next video.